Hello friends, welcome to the class of Cost and Works Accounting. In previous video, we have covered labor cost and direct expenses or other expenses. Okay, so we will go further ahead in this particular video. This is a disclaimer statement of this particular video. Now, in last video, we have just touched the subject of overheads. Okay, so overheads are nothing but all indirect expenditure. Okay, so these overheads, this indirect expenditure, then again classified into the various heads. So let's see which heads are there. First, that is factory overheads. So now, as the name suggests, factory. Okay, so you have to consider that whatever expenditure we incur in the factory, okay, or on a factory premises, that all expenditure will be covered or will be considered under the factory overheads. Okay, so from the procurement of the material and storing the finished goods in the on the factory premises, that all included in the factory overheads. For example, say depreciation of plant, then power consumption, fuel, then the um, wages paid to the helpers or supervisors or foremen. So these are all the examples of factory overheads. Okay. Next is office overheads. So again, as the name suggests, office. So in a company, factory is the place where actual production is carried out. Yes, but there are certain other support services also, and these support services are given by the office, right? So whatever expenditure we incur in office, that will be covered under the office overheads. So for example, salary to the clerks or salaries, only salaries, then depreciation of furniture which we maintain at office, lighting charges, telephone charges, stationery, uh, general expenses. So these are all the examples of office overheads. Next is selling overheads. Now again, in this cutthroat competition, it is very essential for a business to sell its product. Not only sell the products, but also they have to retain their customers too, the existing customers. So for both the things, for selling the products plus retaining the customers, there is a requirement of certain expenditure to be incurred by the company, and these all expenditure comes under the selling overheads. For example, for new customers, there is a requirement of uh, products should be given as a free samples. So these free samples are covered under the selling overheads. Whereas for existing customer, there is a requirement of best services to be provided. So to provide these best services, there is a requirement of certain expenditure to be incurred by the organization. So this expenditure also comes under the selling overheads. And the last one is distribution overheads. So again, as the name suggests, distribution. So distribution of product from company warehouse or from company to the final consumption, that is towards the consumer. So whatever expenditure is incurred for this, so for example, that may be a transportation, maybe for transport insurance, right? So that all covered, maybe upkeep of delivery van, driver salary. So these are all the examples of the distribution overheads. Okay, so overheads basically all indirect expenditures. Now let's move ahead. This is also very much important point. Non-cost items or items which are excluded from the cost accounts. So basically the financial accounting records the transaction and it is used for the uh, different purposes. There are different users of data of financial accounts. In cost accounts also we record the cost, right? But basic objective is ascertainment of cost. So in cost accounting, whenever we record it, there are certain items which are not at all related with the production. Okay, so there are some expenses which are not concerned with the production at all. They are purely financial in nature. So these expenditure are excluded from the cost accounting, right? So while we are solving the cost sheet problems, this information is very essential for us, because if we um, included these items in our cost sheet, ultimately our solution will be wrong. Okay, so let us see what uh, examples are there in the non-cost items. So they are grouped in 4 categories. Let us see one by one. So first is financial incomes. So there are certain uh, examples of financial incomes which are excluded from the cost accounts, which are not covered under the cost sheet. For example, or these are the expenditure: capital profits, dividend received, brokerage and commission received, share transfer fees received, interest on investment, interest on bank deposit, rent received, bad debts recovery, and interest on loan given. So these are all the income side. Okay, you might have come across these points and you might have passed the journal entry too in financial account. But this expenditure, this income is excluded from the cost accounts. Okay, next is financial charges or financial expenditure. What are these? Capital losses, cash and trade discount. Now this cash and trade discount, this particular uh, point generally appears in our problem of cost sheet. Okay, penalties and fines, share transfer fees. This point also comes very often in the cost sheet. Interest on bank loan, interest on debentures, preliminary expenses. This one also is very important. You just remember preliminary expenses. Underwriting commission, capital expenses, both tax, income tax as well as wealth tax. So taxes, when you see the word tax, either income tax or wealth tax in the problem of cost sheet, just exclude it from the cost sheet. Next, loss on investment. Next is some appropriations. So we do some appropriations of profit, and this also excluded from the cost accounts. For example, bad debt reserve, dividend paid. Dividend paid is also one of the item which comes frequently. charitable donations, transfer to reserve, sinking fund, debenture redemption fund, machinery replacement fund, and investment fluctuation fund. So these are all appropriations. Okay. And the last one is abnormals. So these abnormalities are also excluded. What are these? Let us see. Abnormal wastage, abnormal idle time, loss by fire, loss by theft, loss of stock, abnormal insurance premium. These are all expenditure of a purely financial in nature, and they are excluded from the cost sheet or cost accounts. So very important thing for our preparation of cost sheet is concerned, division of cost. So whatever we have seen till date, we have to sum up this in this division of cost. So first we have seen element wise classification, right? So in that we have seen material. So we have seen the direct material, we have seen labor, in that also we have seen direct labor, and we have seen expenses also. So all these direct expenditure, when we add up, then it will be our prime cost. Okay, so this prime cost, then we need to add their factory overheads or factory expenses. If we add this into the prime cost, it will be considered, it will be known as our works cost. Okay, so works cost, in works cost again we need to add certain things, and that is nothing but the office overheads or office cost or office expenditure, right? So if we add a works cost into office overheads, yes, that will be our cost of production. Okay, so this cost of production, then we again take this cost of production and we add up selling and distribution expenditure, and this will be known as our cost of sales or cost, total cost. Okay, so if we take this total cost and we add in net profit, then it will be our selling price. But generally in the examples they provide us the selling price and we need to calculate the profit. Okay, if the total cost is more than the selling price, then we'll get the loss. If the total cost is less than the selling price, then we get the profit figure. Okay, so this is very important from our example point of view, because we need to uh, calculate the cost sheet, we have to draw the cost sheet, and in that cost sheet we need to show these expenditure. Okay, so thus we have completed our first objective, that is to know about the elements of cost. Okay, so this is again disclaimer statement. For more videos, please visit our YouTube channel, Rayat Knowledge Bank. Thank you. Thank you very much.